What if I told you that a new axis of global power is quietly being built, not in Washington, not in Brussels, but in the heart of Southeast Asia? As trade wars rage on and superpowers clash, these two countries are shaking hands, signing deals, and setting in motion changes that could reshape the world's economic landscape. The big question: is the rise of the China-Indonesia partnership the start of a new era, or the next great global risk? This is not just another story about trade statistics or diplomatic ceremonies. Behind the glossy headlines and official handshakes, a high-stakes game of strategy is being played. And the moves being made in Jakarta and Beijing could impact everything from the price of your next smartphone to where the world's wealth flows for decades. Let's zoom out. The last decade has been a masterclass in economic unpredictability. The US and China, two of the world's largest economies, have locked horns in a bitter trade war. Tariffs fly, supply chains tremble, and emerging markets are forced to pick sides or get crushed in the middle. Indonesia, with its vast population, over 270 million people, enormous natural resources, and strategic location, finds itself right at the heart of this turmoil. More than just a tourist paradise or a business curiosity, Indonesia is the world's largest Muslim-majority country, the de facto economic center of Southeast Asia, and an increasingly vital player on the global stage. But here's the twist. While Indonesia is grappling with the fallout of Western protectionism, it's deepening ties with its biggest trading partner, China. And together, these nations are forging new economic alliances that could upend everything we thought we knew about the world order. Just picture the scene from May 2025. Jakarta's Merdeka Palace gleams. Red and gold flags ripple in the breeze. Chinese Premier Li Qiang, flanked by a 60-strong entourage of China's biggest business leaders, arrives for a meeting with Indonesia's newly inaugurated President Prabowo Subianto. The stakes couldn't be higher, the symbolism unmistakable. Li Qiang tells the assembled crowd, unilateralism and protectionism are on the rise, bullying behavior is increasing. He's not naming names, but everyone knows who he means. Meanwhile, President Subianto thanks China for investing, creating jobs, and transferring technology. His message is clear. Indonesia is open for business, and it's looking east. But how did we get here? And what's really at play beneath the surface of these diplomatic pleasantries? For that, we need a crash course on the tangled web connecting Indonesia, China, and the world economy. Let's rewind to the roots. Indonesia's journey to this moment wasn't a straight line. For decades after independence, Indonesia remained on the periphery of global trade, exporting raw materials, oil, coal, palm oil, and importing finished goods. But by the early 2000s, things started to change. China's meteoric rise as the factory of the world sent shockwaves through Asia. Suddenly, Indonesia found itself both blessed and cursed. On the one hand, China's appetite for commodities gave Indonesia's exports a massive boost. On the other, cheap Chinese goods flooded Indonesian markets, undercutting local industries and, significantly, widening Indonesia's trade deficit with China. Fast forward to today. In 2024, trade between China and Indonesia hit $147.8 billion, a dizzying sum. China is now Indonesia's largest trading partner, and Chinese investments are everywhere, from gleaming nickel smelters to Southeast Asia's first high-speed railway. The Whoosh line, whizzing people between Jakarta and Bandung at up to 350 kilometers per hour. Yet beneath the fanfare, not everyone is celebrating. Let's talk numbers. Indonesia's trade deficit with China is long-standing and persistent. For every dollar Indonesia earns selling raw nickel or coal to China, it spends even more buying manufactured goods back. Some economists, like Nguyen Ba Hung of the Asian Development Bank, downplay the risks. A 32% reciprocal tariff imposed by the US is unlikely to significantly impact Indonesia's economy, he says. Others warn of a more precarious future. There's also friction elsewhere. Indonesia's trade with the US, while substantial, has been caught in the crossfire of the US-China trade war. Tariffs, quotas, and looming threats of new barriers could trim Indonesia's growth by up to 0.5 percentage point, estimates Finance Minister Sri Mulyani Indrawati. That's not a small chunk for a developing nation fighting to lift millions out of poverty. And yet, there's opportunity in the chaos. As global manufacturers hunt for safer shores, away from US-China tensions, Indonesia's vast labor force, strategic location, and growing consumer market look more appealing than ever. And Jakarta knows it. So what's Indonesia's strategy? It's a careful, risky, sometimes contradictory dance. On one side, the relationship with China deepens. new joint ventures, more Belt and Road projects. President Subianto openly expresses gratitude for Chinese companies that have participated in our economy, created jobs, transferred technology, and built trust among all businesses. Indonesia is angling to supply even more of the nickel and raw materials needed by China's voracious electric vehicle manufacturers, a key sector in the race for the future. But there's a flip side. That trade deficit isn't going away, raising tough questions about Indonesia's long-term economic sovereignty. Is Indonesia becoming too dependent on China? Could local industries survive if Chinese imports keep flooding in? And then, the American dimension. The U.S., still a key buyer of Indonesian textiles, electronics, and footwear, is threatening to slam the brakes with new tariffs. According to Danie Adi Purwanto from IPB University, reduced U.S. demand could negatively affect export-reliant sectors like textiles and electronics, potentially increasing unemployment. The stakes for ordinary Indonesians, millions of jobs, are enormous. Meanwhile, Indonesia is hustling to hedge its bets. High-level summits with the Gulf Cooperation Council hint at new deals in the Middle East. Finance Minister Sri Mulyani is clear-eyed. Tariffs could hurt, but the window for negotiation is an opportunity for diplomatic solutions. Aiman Falak Medina, analyst at ASEAN Briefing, captures the mood. Indonesia needs a proactive approach to mitigate tariff impacts and future-proof its trade strategy. It's a game of chess with no easy moves, only calculated risks. As the meeting between Premier Lee and President Prabowo unfolds, there are smiles and promises, expanded trade, more Chinese investment, talk of shared prosperity. But outside the ceremonial halls, hard questions linger. Can Indonesia truly benefit from closer trade with China without surrendering its own economic autonomy? Or is it stepping into a new dependency trap? And what about the looming shadow of the U.S.-China trade war? Tariff salvos from Washington could hit Indonesia's key export sectors, just as it's trying to climb the value chain. Experts are split. Some see a golden opportunity, Indonesia as the new global workshop. Others fear a lose-lose, with Indonesia stuck paying the price for other countries' economic battles. There's a deeper issue, too. As emerging powers like China and Indonesia talk up solidarity and cooperation, is this really a new world order, or just old power plays in new clothes? As President Subianto and Premier Lee Chang toast to friendship, everyone in the room knows that global winds are shifting fast. Indonesia stands at a crossroads. Will it become a key player in the next chapter of globalization, or its next major casualty? And as the cameras flash and the deals are inked, a final question looms. Could this new axis, China and Indonesia, actually change not just Southeast Asia, but the entire global balance of power? Or will hidden risks and simmering conflicts bring the whole project crashing down? The answers, as you'll see in the next chapter, may surprise you. As the dust settles from high-level meetings between President Prabowo Subianto and Premier Lee Chang, one thing is clear. The relationship between China and Indonesia is not just a headline, it's a live experiment in global economics and power. But what does the future really hold? Are we witnessing the birth of a new regional powerhouse or the seeds of a new dependency that could haunt Indonesia for decades? Let's dive into the possible futures that experts and policymakers are quietly mapping behind closed doors. One scenario is filled with optimism. Picture this. As American tariffs bite harder and global companies scramble to adjust, Indonesia becomes a shining alternative hub, not just for raw materials, but for finished goods and innovation. With China's Belt and Road investments ramping up, Indonesia reaps billions in infrastructure, from gleaming nickel smelters to the high-speed Whoosh railway connecting major cities. Foreign investments pour in. Factories relocate from China to Java and Sumatra. Indonesia's natural resources, especially its crucial nickel reserves, fuel not only Chinese electric vehicle makers, but global tech giants desperate for new, reliable suppliers. The result? Economic growth shoots up, new jobs blossom, and Indonesia emerges as a leader among developing nations, not just a supplier at the mercy of superpowers. But, as always, there's a flip side. The persistent trade deficit with China, now raising serious questions even within Indonesia's cabinet, refuses to narrow. For 9 years running, China has been Indonesia's biggest trading partner, but the imbalance lingers. Indonesia buys more from China than it sells. Warnings from economists like Danie Adi Purwanto. Export-reliant sectors like textiles and electronics may suffer as the U.S. market shrinks, start to come true. Factories shutter, layoffs rise, and the job boom sputters out. What if the world witnesses a more extreme U.S.-China standoff? As global supply chains split into rival camps, Indonesia could find itself forced to take sides, something its leaders desperately want to avoid. American tariffs aimed at China might catch Indonesia in the crossfire, especially if U.S. officials view close Indonesia-China ties with suspicion. Think about it. Could Indonesia's strategy backfire, making it less of a bridge and more of a battleground? Finance Minister Sri Mulyani Indrawati is already sounding cautious. She's estimated that new tariffs alone could slice up to 0.5 percentage point off Indonesia's economic growth. Diplomacy and diversification are not just buzzwords, they're survival strategies, she notes. Indonesia is aggressively courting new deals with the Gulf Cooperation Council and Southeast Asian neighbors, hoping to avoid being boxed in by any one superpower. But here's where things get really interesting. As China's global ambitions grow, it's not just about trade and investment. Mao Ning from China's foreign ministry has openly promised expanded cooperation in politics, culture, maritime security, the works. Some see opportunity, a chance for Indonesia to leap into regional leadership with both hands. Others warn of risk. The closer Indonesia gets to China, the harder it becomes to act independently when interests start to conflict. Listen to Nguyen Ba Hung from the Asian Development Bank. Indonesia's resilience lies in its ability to pivot. If it can play both sides while deepening ties with new partners, it won't just survive these global shifts, it could thrive. Let's fast forward 5 years. Imagine Jakarta abuzz with newly arrived Gulf, Korean, and Japanese investors, all jostling for a share of Indonesia's vast resources and strategic location. Or, less optimistically, imagine factories still assembling tech and furniture, but now at the mercy of unpredictable global tariffs, with China calling more of the shots behind the scenes. Which future will unfold? On the ground, the consequences ripple out to ordinary Indonesians. If high investment continues, families enjoy rising incomes, gleaming new trains, and better health care. But if dependency deepens or the trade deficit grows, the country risks losing control over its own markets, its own jobs, and even its politics. So what are the practical lessons for viewers, entrepreneurs, and anyone interested in the shifting world order? First, never underestimate the importance of diversification. Indonesia is actively wooing not just China, but partners in the Middle East, the ASEAN bloc, and even Africa. For anyone in business, the takeaway is simple. Dependence on a single market, no matter how lucrative, is a gamble. The same logic applies to individual careers and investments. Always have multiple options on the table. Second, watch the fine print. Even booming sectors can hide risks. Indonesia's furniture makers, for example, are eyeing opportunities as American buyers look for alternatives to China, but tariff battles can turn a windfall into a headache overnight. Adaptability is crucial. Being ready to pivot not just between markets, but between types of products and services, could be what separates the winners from those left behind. Third, policy matters, and political winds can shift in a flash. The fact that Indonesia's government is publicly worried about the trade deficit with China is a signal for businesses and workers. Expect more scrutiny on trade deals, perhaps even new incentives for local industries or barriers to imports that threaten homegrown jobs. Finally, diplomacy is not a spectator sport. The meetings in Jakarta, Lee Chang with Subianto, and the parade of CEOs and officials aren't just ceremonial. They set the tone for everything from port upgrades to university exchanges, and can decide whether Indonesia's future is one of independence or entanglement. For global investors and armchair strategists alike, the secret is this. Indonesia's leverage depends on how skillfully it manages its relationships, not just with China, but with the wider world. That's true not only for nations, but also for organizations and individuals hoping to navigate the choppy waters of 21st century geopolitics. So, can Indonesia truly become a powerhouse by playing China and the US off each other, or is it just courting new dangers? The answer, as so often in international affairs, is both. If Indonesia continues to act boldly, diversifies its partnerships, and insists on fairer economic terms, it stands a real chance of transforming itself into a regional, maybe even global, force. But the risks are real. Overdependency on any one partner, especially as that partner's own priorities and interests evolve, could leave Indonesia struggling to control its destiny. Ultimately, Indonesia's path will be determined not just by the deals signed in grand halls, but by the ability of its leaders and its people to adapt, innovate, and stand up for their own interests. Here's one secret many international observers overlook. Indonesia's real strength is its stubborn independence, born from decades of navigating colonialism, regional rivalries, and modern challenges. That spirit could be the decisive factor in whether the country rises or falters in this new great game. If you want to stay ahead of these fast-moving global shifts, hit subscribe and turn on notifications. Drop a comment below. Do you think Indonesia will become a true powerhouse, or is it walking into a new dependency trap? What would you do if you were guiding the world's fourth largest population through these tricky waters? Thanks for watching. And remember, global power is never just about geography